How's it going, everyone? Welcome to the first Hyperliquid video on the channel, and it's actually not the one you'd probably want to watch. You'd like a bullish video, but that might not be the case. I'm going to show you why today. Now, over the past month, in my private Discord community, I've been saying this could be the complacency stage of a market cycle, and it's nothing that, of course, investors want to see. But I'm seeing similarities on other cryptos like Ondo. In fact, nearly a spitting image. But what needs to happen for hype? It must reclaim 27, 28, 30, and 32 to invalidate any potential downside. And what has been going on over the past few weeks or over the past month, you can see it looked like it was accumulating for higher. I'm seeing all over Twitter everyone getting super excited, saying Hyperliquid hype is holding up way better than the market. And unfortunately, for me personally, I've constantly maintained my bias that the fibs are telling me that while it's under 28 to 32, it's actually considered bearish. And this trend line should actually give in, because we're seeing that these two lines are going to meet at some point. And with it being resistance in the past, it should actually break down to the downside. We're in a bull market, right? But we're seeing this weakness across the market. For example, on Solana, it lost a key level of support. Now, I know it's got nothing to do with hype, but it lost the 200 EMA, this white line. It's validated this double top now. Yes, it has FUD, but still, here as well on Sui, it's on the final layer of defense. It's got multiple bearish crosses. It's had multiple chances at breaking out bullish, and it keeps failing after forming these bearish crosses, confirming them as resistance. So as soon as that gives in, starting a deeper correction, on Ondo as well. Look, it looks exactly like hype, but it's already rolled over. I was saying in the Ondo updates, go check out the other videos on the channel and definitely subscribe. I've got more exclusive content in my Discord. The links are down below. But you can see over here, head and shoulders, I was calling in my videos for it to get down to here. But in fact, from this moment, I was expecting a much bigger bounce where it could lower high in this area, or if it is truly bullish, return it into support. And it couldn't even do that. Even if it had done so, there's still these two other areas it must reclaim. It could have just got up to there and still rolled over. And that's my point with hype. Look, it's accumulating for months on end. It can't even break out of this resistance. Even if it had done so, this key area 30 to 32 would have still been resistance. And at the moment, all I do see is similarities with this being an actual move down, followed by an exhaustion phase, and then continuing with an original trend, which it's showing because it's finding it a lot easier to go lower. So it's truly that. You could say it's an extended A, B, C correction. Yes, I don't think it's the bear market, but it's going to be dumping a lot as it's currently down over 39%. Imagine if it was to do that once again, and in total it's drawing down 63%. Now that would the drawdown wouldn't be considered a bear market, but is that something that you want to take the risk on at the moment? Now, one thing that I can definitely say is that the low of $18 is currently still holding a support. If at any moment in time it does reverse from here and recover the moving averages and the dotted line, this is a great first step. Let's see it reclaim $25. But remember, guys, I maintain my bias that it actually remains bearish even if we see this bounce. Guys, if it bounces 18, 30, 18 to 30%, that still might not be good enough, okay? It will get you excited again. It will draw you in, but it could just be back up into resistance, maybe even as high as there, and still roll over even more. That's even if we bounce from here, when the whole market bounces, right? We've got these bearish crosses forming. We've lost this trend line. We're maintaining this as resistance, the Fibonacci levels. Now, there is multiple levels of support over here in the past, but of course, as it was building up steam to head higher, it's failed, rolled over. Now it's actually testing it in a different way, testing it in a way of trying to lose it. And so, at least in the immediate short term, we are meant to get a bounce from down over here. We've been needing to bounce across the market for the past 3 weeks, but this has actually led hype to bleed it lower. It was better positioned previously at these attempts of breaking out, but of course it finds itself in a worse position right now. Lost the trend line, actually trying to test this to try and lose it. So this bounce up should actually fail and head lower. What we need to see is a recovery of 25, 28, and 32, like that, and that would consider Hyperliquid bullish again. Not the video I want to make, but it is what it is. Now, if it develops and changes into that path I just showed you, then I'll be the first to let you know. But yeah, those would be future targets. But right now, they're distant. They're not actually happening while remaining under those red boxes. And actually, this is more likely to happen. Yeah, I know that sounds crazy. I know that sounds crazy, but it's the truth. If we're not breaking this, the reversal wave's not created. That means these targets are actually not valid whatsoever. It makes sense that if this maintains as resistance, then this is a lower high, and you make lower lows, then it's more likely that these happen. Now, maybe not all the way down to here, but yes, hype could get down into $14, $16 if it's not careful and recovers all those key levels to actually start a path where it could get to 40 and 50 instead. That is it from me today. I just wanted to let you guys know of this and warn those current holders. This is a crypto that I'm personally interested in, that I've previously held, but currently, no, I am not. Ever since it's gone lower. So yeah, thankful that I moved out, even though it's been holding up very nicely in comparison to the rest of the market. It doesn't matter. You could argue that is and say that it was just lagged. It's got a lot of similarities with the market cycle. It was very aggressive, its launch, with no dips. So it's just come to a fair valuation and entered a correction. Now, I don't think it's the bear market once again, but it could develop into that if certain levels are not recovered. That is it from me today. Like, subscribe, comment, and share. If you want exclusive content, more of this, jump in on one of my live streams in the Discord community. You can find the links down below, where I teach you and mentor you how to read the charts so you can identify these things on your own and find out what I'm actually doing with my personal portfolio. Cheers, everyone.